It's not about having a lot of money. It's about making smart money moves. Unknown. A wise person should have money in their head, but not in their heart. Jonathan Swift. What if I told you that the key to financial freedom isn't loud declarations or risky ventures? Instead, it's about mastering silent money moves, strategic, low-profile decisions that steadily build wealth while others are busy chasing trends. Stick around because these underrated strategies could completely transform your financial future. In today's video, we're diving into silent money moves you should be making to secure your financial future. These aren't flashy or high risk. They're intentional and practical steps that the wealthy swear by. Whether you're looking to stabilize your finances, grow your wealth, or create generational stability, these strategies are for you. Let's uncover the smart ways to make your money work for you without making a big fuss. 1. Alternative investments. These investments are financial assets that differ from traditional investment options like stocks, bonds, and cash. They include a wide range of assets such as real estate, private equity, hedge funds, commodities, art, collectibles, and cryptocurrencies. These investments often provide diversification benefits because their performance typically does not correlate directly with the stock market or other conventional investments. This makes them an attractive option for reducing overall portfolio risk. Alternative investments tend to have unique characteristics. For instance, they often require higher initial investments, longer holding periods, and can be less liquid than traditional assets. For example, selling a piece of fine art or a real estate property might take weeks or months, unlike publicly traded stocks, which can be sold instantly. Additionally, their value may be harder to measure as they don't always trade on public markets. Despite these challenges, they offer the potential for high returns and can act as a hedge against inflation or economic downturns. Take, for examples, precious metals, such as gold and silver, have long been seen as a safe haven during economic uncertainty. For example, during the 2008 financial crisis, gold prices surged as investors sought stability. Unlike stocks or bonds, gold doesn't pay dividends or interest, but it holds intrinsic value, making it an excellent hedge against inflation. A young investor might buy small gold bars or coins periodically to diversify their portfolio. Alternatively, someone who prefers a more passive approach could invest in exchange-traded funds, ETFs, backed by physical gold. Silver, often more affordable, offers similar benefits and can appeal to those starting with smaller budgets. 2. Art and collectibles. These provide a unique way to grow wealth while enjoying the aesthetic or cultural value of the investment. High-net-worth individuals often purchase rare works by artists like Picasso or Banksy, but even emerging artists' pieces can grow in value over time. For instance, a tech professional with an eye for contemporary art might buy a $5,000 painting from a rising artist, only to see its value triple as the artist gains fame. Similarly, collectible items like rare wine, whiskey, or even limited edition sneakers have gained popularity. A whiskey enthusiast might invest in a rare bottle of Macallan 1926, which has been known to sell for over $1 million at auction. The key to success in these markets is knowledge and patience, as the best returns often come from holding these assets for years. 3. Intellectual property, IP. This refers to creations of the mind, such as inventions, designs, trademarks, or artistic works, that can generate income through licensing, royalties, or outright sales. For instance, an author who writes a popular self-help book not only earns from book sales, but can also license the content for translation or adaptation into workshops and online courses. Imagine a blogger who turns their expertise into a book titled The 5-Day Productivity Boost. This book could generate passive income for years through royalties. Similarly, a musician who creates a hit song might earn money every time it's played on streaming platforms, used in commercials, or covered by other artists. In the business world, inventors and entrepreneurs can protect and monetize their ideas through patents. For example, someone who designs an innovative kitchen gadget, like a collapsible blender, can patent it and license the rights to a manufacturer. The inventor earns royalties for each unit sold without needing to handle production or distribution. Alternatively, they might sell the patent outright for a lump sum. These scenarios highlight the long-term value of IP, as it enables creators to benefit financially from their ingenuity while leveraging others' resources to scale. IP is particularly appealing for those who enjoy creating, but prefer not to manage the operational side of a business. 4. High-growth sectors, which represent industries that are expanding rapidly due to innovation, increasing demand, or societal trends. Investing in these sectors can lead to substantial financial gains, especially for early adopters. For example, the renewable energy sector has been growing as governments and businesses focus on sustainability. Imagine an investor who notices the rising popularity of electric vehicles, EVs, and decides to invest in a company like Tesla or a battery manufacturer specializing in EV components. Over the years, as the world transitions to greener technology, these investments could appreciate significantly, reflecting the broader market trend. Similarly, the technology sector offers immense opportunities in areas like artificial intelligence, AI, cloud computing, and cybersecurity. For instance, a tech-savvy investor might identify the growing reliance on remote work and invest in cloud-based service providers like Zoom or Amazon Web Services, AWS. Another example could be investing in biotech companies during a healthcare innovation boom, such as those developing advanced gene editing technologies or life-saving drugs. While high-growth sectors often carry more risk due to their evolving nature, the potential for outsized returns makes them an exciting choice for investors willing to research and embrace change. If these silent money moves are resonating with you, check out our other video titled "One Money Habit That Can Make You Rich." It's packed with actionable advice to transform your financial habits. The link is in the description below. Don't miss it. If you're finding these strategies valuable, hit the like button, subscribe to our channel, and comment below with your favorite money move so far. Your engagement helps us bring you more life-changing content. 5. Venture funds and private equity offer investors the chance to participate in the growth of privately held companies, often with the potential for substantial returns. Venture funds focus on early-stage startups, where investors pool money to support high-potential businesses in exchange for equity. For example, someone might invest in a venture fund targeting tech startups, gaining exposure to innovative companies like those developing AI-driven apps or sustainable energy solutions. If one of the startups becomes the next big success, the fund's value could grow exponentially, providing significant returns to its investors. However, because most startups fail, diversification within the fund is essential to balance risk. 6. Private equity. Private equity typically involves investing in more established companies with untapped potential or those in need of restructuring. For instance, a private equity firm might acquire a mid-sized manufacturing company that could increase profitability with better management or streamlined operations. Imagine an investor contributing to such a fund and, after a few years, the company is sold at a higher valuation due to its improved performance. While private equity often requires larger minimum investments and longer holding periods, the rewards can be substantial. These investments appeal to those seeking high returns, but they also require patience and a tolerance for illiquidity, as returns are usually realized over years rather than months. 7. Renewable energy. Renewable energy is an increasingly attractive sector for investors looking to capitalize on the global shift toward sustainability. For example, an investor might choose to buy shares in a solar energy company like First Solar or a wind energy manufacturer like Vestas. With governments around the world pushing for cleaner energy sources and businesses adopting greener practices, the renewable energy market has seen significant growth. An individual who invests early in companies that provide solutions to combat climate change could see substantial returns as the world moves toward reducing reliance on fossil fuels. Additionally, renewable energy infrastructure like solar farms or wind parks can offer long-term stable income through power purchase agreements, PPAs, making this sector ideal for both growth and income-focused investors. 8. Offshore investments. Offshore investments allow individuals to diversify their portfolios by placing money in foreign markets, potentially reaping the benefits of global growth. For example, an investor in the US might look at stocks in emerging markets like India or Brazil, or consider real estate opportunities in places like the Caribbean or Southeast Asia, where property values are on the rise. Offshore investments can also help reduce tax burdens, depending on the structure of the investment and the investor's country of residence. However, they come with added risks such as currency fluctuations or political instability. 9. Networking. Networking is an often overlooked but incredibly valuable form of investment that can lead to significant personal and financial growth. For example, an entrepreneur attending industry conferences or joining professional groups might meet potential business partners, investors, or clients that could help scale their company. By establishing strong relationships, a professional can gain access to job opportunities, insider knowledge, or collaborations that drive their career or business forward. These silent money moves might not make headlines, but they can make a massive difference in your financial future. The best part? They're subtle, intentional, and sustainable. The question is, which one will you start today? But this is just the beginning. In our next video, 8 must-have investments before you turn 50, how to get rich. We'll explore the game-changing assets you need to secure long-term wealth. If you're ready to take control of your financial journey, like this video, subscribe to the channel and share it with someone who needs these silent money moves in their life. Let's grow together. This video is for informational purposes only and does not constitute financial advice. Always consult a licensed financial advisor before making major financial decisions.